Hello everyone, newborn investor here and welcome to another video. Today we are going to go through one of my favorite stocks from the fintech space and the reasons why I think it could possibly be a wonderful growth stock in your portfolio. So if you're interested, make sure to stick around as we're starting right now. Probably by now you may have guessed which company I'm going to talk about. But if you're still wondering, it's Square, ticker symbol SQ, the $68 billion fintech giant. Square is a payment technology company that can turn any smartphone or tablet into a credit card reader. With Square's technology, small businesses are able to seamlessly adopt a cashless business model. Square also provides point-of-sale devices and other tools necessary to help small businesses process transactions. Between 2012 and 2019, Square's gross payment volume has grown from $6.5 billion to $106 billion, and that is a whopping compounded annual growth rate of 49%. So, is Square still poised for stellar growth? Can it still beat the competition and continue its dream run? Well, that's exactly what we are going to cover in this video, so stay tuned. By the way, if you like the video and find it valuable, make sure to hit the like and subscribe button. I really appreciate your support as it keeps me motivated to put in the long hours for making these videos. Alright, let's move on. Inspiration for Square occurred to Jack Dorsey in 2009 when Jim McKelvey, a friend of Dorsey, was unable to complete a $2,000 sale of his glass faucets and fittings because he could not accept credit cards. Small businesses could not afford the exorbitant rates charged by conventional credit card companies, and hence they distanced themselves from going digital. Dorsey was early to identify the opportunity and had a solution. He realized that the modern-day smartphone had almost everything needed to accept a card payment. The only part missing was a card reader, so Jack went on to build one. That Square card reader later went on to be the face of the company, and that beautiful piece of hardware was how the company got its name. Today, Square is more than a payment processing platform. They offer a variety of products starting from a Square stand, which could replace a billing register, to a suite of software products that can help manage complex things like payroll. Analysts estimate Square's seller business to continue its growth, which can potentially grow transaction-based revenues at 19% annually until 2025. To the surprise of many, in 2014, Square launched Square Capital. Square Capital offers financing to those merchants using Square, and for that, Square partners with financial institutions. Unlike traditional banks, loans provided by Square Capital are for short-term and for smaller amounts. They serve small businesses that do not have access to traditional banks, and this way they're not competing with the big banks. An added advantage to Square is that they have access to all the transactions of a business, which can help them make lending decisions and helps them better understand loan default risk. Another core offering from Square is the Cash App. Launched in 2013, Cash App offers peer-to-peer cash transfer services, banking services such as direct deposit, debit cards, ATM access, a platform to invest in equities and Bitcoin, a rewards program, and free money transfers from the US to the UK. Since its launch, Cash App has been far outgrowing the rest of the business, and I believe that is good for the company. As the user base for Cash App grows, I think Square Capital can pitch in and extend credit services to Cash App users. There is plenty of room to grow, and it makes sense for the company to utilize its existing customer base for more sources of revenue. Like most card processing companies, Square makes most of its money from transaction fees. Square takes 2.75% from every transaction, and even today fees from transactions contribute the majority of Square's revenue. Square also makes money from subscriptions, hardware, and Bitcoin. Transaction-based revenue for the 6 months ended June 30, 2020 increased by $8.4 million compared to the same period last year. However, transaction-based revenue for the 3 months ending June 30, 2020 decreased by $92.9 million, which is a 12% decline compared to the same period last year. The fall in revenue during this time was primarily due to the decline in gross payment volume, but in spite of all the uncertainties due to the pandemic, total revenue for the 6-month period increased by $1.2 billion, which is a 55% growth. Additionally, Square's Bitcoin business is primed for growth. Bitcoin revenue for the 6 months ending June 30, 2020 increased by $990 million compared to the previous year. When evaluating revenue from Bitcoin, investors should also take into account the amount Square has to pay to purchase Bitcoin. Like most growth companies, Square is not profitable yet. Square reported a net loss of $117,000 for the 6 months ending June 30, 2020. However, Square has good liquidity with almost $3.2 billion in cash and cash equivalents. Square does have fierce competition across all its business segments. JP Morgan Chase is rolling out a new card reader that pairs with a merchant smartphone, as well as a new small business checking account and a payment platform called Quick Accept. In spite of this, I don't think that Chase is going to put Square out of business. Square offers more than just a payment platform which could help retain and even grow its customers. Square is one of the only companies in the world with real-time, front-end access to both consumers and businesses. At some point in future, Square may be able to facilitate transactions directly between its sellers and Cash App users, thereby cutting off most third parties, which can lead to better profits. In the peer-to-peer segment, Square faces stiff competition from PayPal's Venmo. Unlike Square's competition, users don't have to set up an account for using Cash App. Revenue from Cash App over the years has far outgrown the other segments, and I believe this trend will continue. Additionally, Square's ecosystem has tremendous international growth potential both for sellers and Cash App users. Square has already rebounded from the 52-week low of $32 to the high of $190. The stock has a history of rebounding from dips, and I'll be looking to buy the dips, and I will certainly use dollar cost averaging. While the stock has a high valuation, it also has incredible earnings power. Short term, there could be some backlash if the tech bubble bursts, but long term, Square is a fantastic stock, and this is just my opinion. Now, I would love to hear from you guys. What do you think about Square and its growth potential? Leave a comment below with your answer and I'll be sure to follow up with you. Also, if you liked this video and found it valuable, make sure to hit the like and subscribe button. I really appreciate your support. So until you hear from me again, stay safe and thanks for watching. Bye.